I'd like to welcome you all to this session, this amazing session. I'd like to also acknowledge the presence of our partners. That is KBA, the partners who will run the program today. That is Metropol and as well International Trade Center. Member banks, Prime Bank, of course, is represented. We are happy to be here today to tackle this interesting topic of SMEs enhancing access to financing. I mean, this is a topic I would say I understand too well from where I sit, because I interact with SMEs every day. So as well, I know what they go through in terms of looking for funding for their businesses, for business expansion and everything. So it's a topic of interest. It's a topic that is important because, again, as we know, SMEs are the drivers of this economy, both at micro and macro level. And as stakeholders, it's important for us to keep empowering and educating our SMEs, because we know what they mean to this economy, in terms of job creation and all that. So I'm happy to be joined by Mr. Samuel Omukoko, the Group Managing Director at Metropol. I'm also happy to be joined by Mr. Ian Sayers. I hope I pronounced your second name properly. Senior Advisor at International Trade Center. Mr. Sayers will be joined by Angela Nyabera, who will also co-host or rather speak on the next topic with him. So the session will run for 1 hour, and I'd like us to send as much queries as possible through the chat. At the end of the session, Mr. Omukoko, once he's done, we'll take a few questions before we go to our next speaker. So without taking too much of your time, I'd like to welcome Mr. Omukoko to the floor to take the mic and to take us through the discussion of today. Karibu sana, Mr. Omukoko.
Thank you very much. And a very good morning to everyone. As you've been told, my name is Sam Omukoko. I'm the Group Managing Director of Metropol Corporation, which runs Metropol Credit Reference Bureau and Metropol Credit Rating Agency. In today's discussion, I just want to mention what I normally call the MSME Conundrum, the challenge that micro, small, and medium enterprises are normally faced with. Usually these are classified into 3 categories. The first one being for access to affordable finance. The second one being access to markets. And the third, therefore, for today's session, I would like to focus on the access to finance, which is the challenge that is most prominent to many of them. And when you're looking for to discuss access to finance to the MSME sector, you need to understand what the lenders think about the MSME businesses. Now, you've got the first challenge, which is the high mortality rate. That means most SMEs do not last long. Many don't pass their second year, and the death rate actually is very high, what you call the mortality rate. Lack of business data has always been a challenge. Credit appraisal in the bank requires data in order to be properly appraised. And anytime banks require data from the SMEs, that is always a challenge because of how they keep their books. Most SMEs also borrow small transaction tickets, and that also in terms of the manpower required to assess these applications, you'd find that it is not cost effective for a senior credit officer, an experienced person, spending time to evaluate a credit application of 50,000, 70,000, while he will spend the same amount of time evaluating a credit application of 10 million or 100 million. So that's always a challenge. Then, of course, most SMEs do diverse businesses, so their revenues are usually also mixed. So you can find that bank deposits in an account don't just come from one business, they actually come from several businesses. So when you're trying to determine capacity in terms of cash flow, you probably are not looking at cash flows from or bankings from one business. Then, of course, the other one is the lack of collateral, which is a major challenge to most businesses. So that's what banks usually find are the common challenges that SMEs face when they are applying for credit from lenders. Now, on the SME side, they also have a perception about how banks view their business. In terms of working capital management, they have challenges. Sometimes they have supplied to institutions like government or large corporates, and they cannot be paid on time. Usually this gets them into liquidity problems, and therefore they are unable to service their debts. And this has been a major challenge. And we all know that Treasury is trying to address this challenge, even to the extent of enacting legislation that would punish anybody who does not pay suppliers on time. Of course, the high cost of capital in terms of interest rates that they are charged is also another factor that discourages them from seeking for credit. Stringent appraisal conditions requiring heavy documentation, which most of the time they do not have. That, again, is another challenge. And of course, the negative attitudes, I think that lenders tend to have an attitude of a non-sophisticated SME trying to access credit. And then, of course, of lack of capacity because of growth issues and mortality issues. So SMEs have a view about how lenders look at them. Lenders also have a perception of how they look at the SMEs. So the thing then to say, how do you then solve this access to finance challenge? We at the Bureau have a solution. The Bureau provides a solution that enables banks or lenders to share credit performance data on borrowers. Now, in the specific instance of SMEs, what this would mean that an SME's credit profile would suffice as a source of information that a lender wants to look at to be able to appraise that particular credit. Because if lenders are sharing information with the Credit Reference Bureau, what the Credit Reference Bureau does is simply to build up that credit profile on all credits that have been advanced to this entity, and that information includes type of credits that have been advanced. That's installment credit, revolving credit like overdrafts or credit cards or open accounts where you have one bullet payment. The purpose of the facility is also information that is shared, interest rate charged, and of course the period for repayment and the repayment performance, how the SME is actually servicing its loans, and if there's any collateral that has been provided, then that collateral will also appear in the record. Now, this information is collected in one report and then constitutes a full credit report of how that SME services its loans. Now, this credit history has what you call informational capital. It's value that is used by bankers to evaluate the credit worthiness of this SME. So you can see that when an SME has a full credit report, some of the information that banks would be looking for to appraise the credit application would already be in the credit report. And because it is coming from a credible institution like a credit reference bureau, banks now are relying on credit reports to evaluate the credit worthiness of any business. So businesses need to understand that the role the credit reference bureau play in the quest for credit is to in their reports, and that information is used positively to evaluate their credit worthiness. Now, for micro and small enterprises, that information is sufficient to inform the bank on the ability of the entity to service its debt. But we need to understand that the credit report is simply a summary of credit accounts that the business actually has. The next level of value that comes from a credit report is a credit score. And a credit score is simply a mathematical calculation of the performance of the credits that are on that account, summarized on the basis of risk. Now, when you look at a business credit profile, you will find very many loans there. Some loans from banks, some loans from SACCOs, some loans from MFIs. Some loans will be being repaid well, some loans perhaps will not be being serviced well. But what then happens is that how do you combine all this into a metric that can be able to tell you the credit worthiness of this business? What the bureaus do is to calculate a credit score based on this data that then is easier to use in terms of decision making. Where credit scores are available, it then becomes easy to even automate decisions. You don't have
Sorry, Mr. Omukoko, I think we lost you a bit. Maybe you can repeat a bit what you've said, because we lost you.
Okay. Can you hear me now? Hello?
Yeah, I think now you're clear. You can go ahead.
I was saying that information on the credit report is usually summarized to give a credit score. And a credit score is an easier metric to enable a lender to assess the credit worthiness of a business, because it summarizes all the data that is available on the credit report. Where a credit score exists, decisions can be automated based on assigning limits that correspond to each credit score. Now, credit scores usually vary from 200 to 900, and any scores that fall below 400 would indicate that the account is having problems in servicing its debts, and any scores above 750 would indicate that this is an account that is servicing its debts very well. Scores between 400 and 750 would be average scores, which the lender will then use to say, we can give you credit, yes, but probably will charge you a higher interest rate, or you need to support your application by some form of collateral like a guarantee. So these credit scores are easy to calculate. They are always updated. Anytime information comes onto the borrower's credit profile, and they are an easier way of a lender being able to appraise an application from a given SME customer. Now, credit scores basically measure behavior, because they tell you that this particular customer has been behaving well by repaying their loans, or this particular customer fell into default when they were servicing their loans. But when a credit is being appraised, lenders also want to measure the capacity. How much can you actually borrow and what are the cash flows that the business can be able to afford. Now, to be able to go further beyond the credit score, you then require a credit rating.
Sorry, sir. We lost you again. Sorry. Just go again. Sorry.
Is that fine?
Yeah.
Sorry, that's one slide back.
Okay, I was talking about credit rating.
Yes.
And I was saying that the credit score is a measure of the borrower's behavior. It simply says that this particular customer was given a loan, they have paid it well, or they are having challenges in paying that facility. So that the scale of the score, which runs from 200 to 900, any score between 200 and 400 would indicate that that particular business is struggling to repay the loan or has moved into default. Any score above 750 will then indicate that this is to pay its debts.
Okay,
Hello?
we lost you again. Hello?
Hello, can you hear me?
Yeah, it's okay now. I think could be your network or something.
Yeah,
but we can hear you now.
But I'm about to finish. So,
okay.
Because the credit score only measures character, the bankers or lenders need another metric that looks at the capacity, the ability for the entity to service the debt, and that ability comes from the cash flows. And there are other factors that also are important when the overall condition of a business is being evaluated. Those factors will look at the demand of the product, the revenues that are being generated, and the industry. I keep having challenges on that. Just bear with me. Is it okay?
Okay. Yeah, it's okay.
Yeah, so the credit rating now comes in to fill in the gap for measuring the capacity of the business to meet the repayments. That means the cash flow. So it looks at projections of cash flows, looks at the conditions that surround those cash flows, the risks that the business faces in generating those cash flows. There could be industry risks, there could be environmental risk or management risk. Credit rating looks a little bit more, is more analytical, looking at every aspect of the business. So when these two parameters are combined, that the credit to evaluate the overall risk of this particular business entity. So the way things are now working is that most businesses have a credit history. That credit history is then measured by the credit score. But businesses need to go a step further and start getting a credit rating, which then puts together their character and their ability to pay, which then becomes a quicker and more efficient of the business to service its loans. And when you look at the scales for credit rating starts from a AAA, to a AA, triple B, all the way up to a D. A AAA business is an excellent business servicing its debt and has the ability of cash flows to service the debt. But a business that has a D rating means that business has already gone into default, and therefore it carries a very high risk. So these two measures are the things that banks or lenders are now beginning to look at to be able to create efficiencies in their credit appraisal system and also move into what is currently being developed by the central bank, because the central bank now is saying all lenders must move to risk-based pricing, which means that you will be charged an interest rate that reflects the risk of your business. If you're a AAA customer, you will pay a lower interest rate. If you are a C customer, you will get the loan, but you probably will be charged a higher interest. Or a lender might go ahead and say, yes, I'll give you the loan, you will pay a higher interest, but probably I still need support of some form of collateral. So this is now the conversation that has started taking place between the lender and the borrower, and we at the Credit Reference Bureau can be able to support, because we can provide the credit scores and we provide the credit rating that is required for these businesses to use in engaging lenders to give them credit. So that's all I can say for this presentation. But in summary, the key thing is that the lending technologies are now changed on the part of SMEs. The Credit Reference Bureau profiles are important inputs into that process. Credit scores are important, and credit rating is going to be the way that most lenders would go. If this technology is adopted, then it's going to now become possible to have business loan applications approved online, because every rating is then given a pre-assigned limit, which then, if you fall into that category, you will automatically be able to get the credit that you are looking for. Thank you very much.
Okay, thank you very much, Mr. Omukoko. We appreciate the session that you've taken us through. Thank you for enlightening us on this very, very thorny topic. Now, there are two questions that have come up for you. The first one is, I'll only take two so that we are on time. So the first one is, how prevalent are the credit assessments based on transactions and loan performance history rather than assets?
Can you hear me?
So this question has come from Ian, Mr. Ian. It asks for MSMEs, how prevalent are credit assessments based on transactions and loan performance history that rather than assets? I guess what Ian is asking is rather than beyond just looking at security. I'm assuming that's what he means by assets. Or Mr. Ian, are you with us? You can shoot the question or clarify what you mean.
Okay, thank you, Sarah. Yes, Mr. Omukoko, my question was more about the way that banks assess the riskiness of enterprises, and in your experience, how many financing providers or banks are skewing their risk assessments more based on the transactions history of an enterprise rather than their securities as such? Because not many SMEs have a lot of securities that are valued by banks. Thank you.
Thank you very much. Can you hear me?
You're clear. Go ahead.
Thank you very much for that question. What we have noticed that the trend is that lenders now use credit reports as part of the documents that they look at in appraising credit. But it has been that using a credit report is a binary decision. So one would say if you have a default history, then the answer to you is no. And if you don't have a default history, then the answer to your request is probably yes. But there has been progression from just using the credit report to now using credit scores, because credit scores are providing a means of being able to allocate the amounts that can actually be lent based on the history. The CRB regulations that were enacted last year, that's 2020, do mandate banks to start using bureau credit scores as part of their credit appraisal tools when assessing customer applications. But like I mentioned, there are limitations when you are just using the credit score, because the credit score will only focus on behavior. It will show how you have behaved in servicing the existing debts. It will not predict how you will behave when you are given a loan in future, in the sense that in terms of capacity, what cash flows do you generate? So there's progression from the credit report to the credit score and to credit rating. Just 2 months ago, we have been holding a pilot with Equity Bank in Nakuru, where Equity is trying to pilot the use of ratings to extend credit to their customers. So we rated about 600 businesses, and about 40% of them have been given credit on the basis of their rating only. We also in discussion, in fact, KCB has already moved to actually start giving SME credit on the basis of the rating alone. So it's a practice that is now picking in the market. We had a discussion with Cooperative Bank, which is also looking at now moving from just using credit scores to using ratings to extend credit to business. So I believe that it's a progression, and in the next year or so, credit rating is going to become more prevalent than just the available credit report and credit scores on the Credit Reference Bureau.
Okay, thank you, Mr. Omukoko. There's another question, which is the only question we'll take. There's Emmanuel M. You've asked why banks don't use the credit scoring in credit determination instead of just writing someone off when they, if I may rephrase your question, when they apply for a facility, why are we not using the scoring from Metropol to decide whether you're a good client for credit or not? You've also mentioned that banks here should commit. Can we commit to use the CRB reports when we are determining that pricing for? Can we use this model when we are determining the pricing for lending? What I would mention is, if I may just respond before maybe I also request Mr. Omukoko to say something, is he's mentioned that there are other measures that banks use to look at credit other than just the CRB report. We also look at risks, environmental risks, cash flow projections, before we determine whether to lend or not, or how much we're going to lend. You may apply for an amount X, and we will tell you for now, you start with a small amount, and then we will increase it maybe in 6 months or 1 year. So I wouldn't say it's only the CRB. Well, CRB is very important. What Metropol does is very important, but there are other things that banks also look at that we should keep in mind, so that we don't just you don't feel that we are writing you off. You see, Mr. Omukoko mentioned that there are perceptions. There is the bank perception and there is the customer perception that we have. You suspect that the bank will not do this for you, and the bank says something else. But it's all in good faith. That we would want your business to grow, really, at the end of the day. But Mr. Omukoko, maybe you can add something?
What I can add is that I think it's a matter of practice and the development in technology, lending technology that the banks are adopting. What we have seen progressively is that we have moved from strict requirement of collateral, where there was no credit information being shared on borrowers, to now the use of credit information as part of the input of their credit appraisal process. And this now is moving towards the use of credit scores. And I know eventually you can see in terms of the pilots that I've mentioned, banks are moving all the way up to credit rating. So banks would normally have their own internal policies of how they want to assess credit. Central Bank has come out strongly and said banks must move to start pricing customer interest rates based on their customer risk. As soon as, because it's being mandated by law, you will find that most lenders will now have to adopt that practice, so that whenever you go to a bank to borrow, your credit rating or your credit score will determine what price you pay. It is something that has already been put in law. It is something that banks are beginning to adopt, but usually it is a process. So I see in the near future, your credit score or your rating will be a determinant in what kind of price you pay to a lender and what kind of terms that lender specifically gives you when they give you a facility.
Okay. Thank you very much, sir. I believe we've learned something from that session. I would now like to invite our second speaker, that is Mr. Ian Sayers. Mr. Ian, like I mentioned earlier, is a senior advisor at ITC, International Trade Center Access. International Trade Center Access works very closely with, they work with Fowell Innovations. Fowell we have Fowell's co-founder, Angela Nyabera, who will be hosting with Ian today. They'll tell us what they do and for MSMEs. So Ian, Mr. Sayers, welcome to the floor, so that we can keep time, seeing we are already
Thank you, Sarah. Thank you, Sarah. Good morning, everyone. I'm very pleased to see so many of you participating today. Sarah, thank you for the introduction. My name is Ian Sayers, and I'm the Senior Advisor for Access to Financing and Investment at the International Trade Center in Geneva. So I'm calling you from...
Ian, I think your network has an issue. We can't hear you very well.
Right. Okay. Hold on one second. Let me take my own video off. Let's try that. Sarah, is that better? Sarah, can you hear me now?
Try again.
Okay, let's, okay. All right.
Yeah, that's better.
Okay, good. Okay, so my name is Ian Sayers. I'm the Senior Advisor for Access to Financing and Investment at the International Trade Center in Geneva, which is where I'm speaking to you from this morning. First of all, I'd like to say that ITC has had many years' experience of working in Kenya, and we feel that we have quite a good understanding of the enterprises and your challenges. And I'm very happy that Mr. Omukoko of Metropol Group made such a great introduction there about the difficulties that many of you face each day. So what we've been doing is trying to find ways of helping you enterprises and also the financing providers and business development support services in Kenya to actually come together so that enterprises can find the financing support and the services that they need, actually match them to their needs, and in the other direction, that the financing providers and banks can have a direct channel to MSMEs for their products, which are designed to help those classes of enterprises. So we've designed and implemented now, with the help of Angela and her team from Farwell Innovations, the MSME Financing Gateway. It is now live in Kenya, so we're happy to bring you that, and it's being hosted by KEPSA. Unfortunately, KEPSA could not join us this morning because they have a parallel event going on, but they're there to help you as well using this facility. Right. Okay, so look, as Dr. Omukoko highlighted, you all face a number of challenges, which I'm sure you know really well. We surveyed enterprises in Kenya and came up with these numbers. And perhaps most startling is the fact that not many enterprises really know the full range of financing facilities which are designed to help them. And in fact, across East Africa, there are now more than 450, and in Kenya alone, more than 200. So at the same time, when we spoke with the banks and those of you who are present on this event will be witness to some of those conversations, we found that equally from their side, it's challenging to actually present their facilities to micro and small and medium-sized enterprises, and at the same time get some kind of insight and analytics back about how well they are responding to the needs. So these are all things that the Financing Gateway is designed to do. I'm showing you here now the homepage of the Gateway and some of the facilities which are available on it. So first of all, it's a multilingual site. You will find information on the gateway and the navigation in Swahili, in English, and in French at the moment. It's multi-countries, so there are 5 countries whose data will be up and information will be up there on the Financing Gateway. And I've highlighted here at the top the registration login, which is designed for users, for financing providers, and for business development support services. And that registration, if you're a user, if you're an MSME, and you put in some very basic details about your enterprise there, that will help customize and filter the facilities which are on the site and the services which are on the site so that they match your kind of enterprise. And that provides a quick way of actually filtering all these hundreds of facilities around your kind of business. And I'm also showing you on the site here the basic filter criteria. So in a way, this is like a directory. It's almost like a Google for financing providers and business development services in Kenya. There is a short video, which you can watch at your leisure, which will help you navigate the platform. And then we have here the main menu, which I will show you now. On the right-hand side, you can see the key facilities that we present here on the platform. Perhaps not so evident from the main menu, but really important for most enterprises who face challenges in understanding exactly what's required to prepare a financing application. We've hardwired into the platform a number of tools and services to help you. So there is a quick finance referencing tool, a decision support trees, and news and events, and also direct links to some of the institutions and support services providing training and information in Kenya, including KBA's Inuka program and other Institute KEPSA's training facilities and the Chamber of Commerce, for example. Those of you who are really quick off the mark will be able to focus your mobile phones on the QR code there in the slide, and that should take you direct to the Kenya Financing Gateway platform. It's available for mobile phone use, for templates, for tablets, and for PCs. So what does it look like when you make a filter? Well, here's a quick example. We have at the top of the financing options and providers filter a list, different types, different categories of filtering which you can select or even put in keywords to shortlist those facilities which match your needs. When you've made the shortlist and you've gone through it, if you find financing providers that are particularly interesting, you can click on the little heart sign, which helps you retain them as your favorites, which means each time that you go into the platform, you don't have to redo the search. You can go straight to those financing providers which you know match your needs. And at the same time, on the left-hand side here, you will see that you can click directly through to a website, to a brochure, which has a hyperlink to it. So the actual brochure about the financing facility provided by the financing provider, or telephone numbers and email addresses to their agents. Now, I said at the start, this is equally useful and has been designed to be equally useful for financing and business development services providers. And how it helps you is that it should improve your conversion rates. You should be getting inquiries through the platform from enterprises that have already shortlisted your service as looking as if it's matching their needs. At the same time, KEPSA as host has the ability to pull off monthly and quarterly analytics about what enterprises are searching for. So I would like to, at this point, mention to our enterprises listening that these analytics are completely anonymized. So none of your personal data or business data is going to be sent around to anybody, but it does allow financing and business development services providers to see what people are looking for and adapt their services and their financing facilities accordingly. We also have arranged what we call a private community of practice, where we're encouraging business development support services from different countries to share their tools and their insight and information. And also they will find a complete set of ITC tools and training manuals and materials and information sources. So at the moment, the Financing Gateway is being rolled out in 4 countries in East Africa. Kenya and KEPSA as host is the first. And we're moving on now to Uganda and Tanzania, and then Rwanda, and eventually to Burundi in the French language. And for those of you that would like to take note of the Financing Gateway link, it's down here on the bottom right-hand side of the page.
Ian, sorry to interject you. There is a request to zoom in the presentation a bit. I think it's a bit small.
Oh, right.
Yeah, maybe
okay.
you can just zoom it in. Thank you.
I think we can do that. Zoom in. Here we go. How's that?
Yeah, looks okay. Can go ahead.
All right. So I'm going to hand over now to Angela. And Angela, Farwell Innovations have been really core to the success of our development and design development and implementation here. And her team is busy at the moment helping banks and financing providers and service providers to register and update, verify their information that's on the platform, and also to upload their brochures. So she's had some interesting experiences talking with service providers these last few weeks. Angela, I'm just going to hand over to you And before I do that, I will put up here, I will swing here onto the screen so that you can all see this. This is the live Financing Gateway platform homepage. So thank you, everybody. Angela, over to you.
Okay, thank you very much, Ian. Thank you very much, Ian. Many thanks to all the presenters that have come before, Sam, as well, for his presentation that built a good foundation to ours, and the presentation of the MSME Financing Gateway. So as Ian has mentioned, we are very much honored to have been able to provide this solution that we hope will provide MSME entrepreneurs a platform that we hope will make life easier in terms of time spent in research for financing instruments as well as business development support services. So this platform is available on kenya.financinggateway.org, and it's available for free. You don't have to worry about any payment for anything. All the information on here is available at no cost to you. So for the financing providers that are participating, we are very pleased to mention that we have so far got a total of over 200 financing instruments and business development support services that our MSMEs can already start exploring. Once you create an account as an MSME, you will be able to explore over 200 financing instruments and business support services that are available for you as an SME entrepreneur in Kenya. So for the banking service providers, we welcome you to log on to the platform and just start looking at your data as it is presented. And the ones who do not have their data on the platform yet, you're welcome to register on this platform. All you need to do is create an application onto where I think Ian is pointing at. You'll see a drop down on the register button that will allow you to, that will lead you to an application form where you can fill up some brief information about the name of the bank or the name of the financing instrument provider and the instruments you hope to provide on this platform, and then submit that. That will straight away go to the country host admin. That will be the KEPSA team as well as ours. And once we receive that, you will be contacted with the next steps. Basically, we would like the financing providers to give us two main people who will be the people in charge of providing or maintaining their instruments on this platform. And the process is very simple. We'll set up a training with you, walk you through the process, and once we are comfortable and you are comfortable, you will have your data uploaded and published on the platform. Once it gets published, it will be available to the general public so that they can start looking at it and maybe making inquiries on the instruments available. So this platform is very much a platform that has been set up for financing providers to kind of share their SME propositions so that SMEs can, demystify many things about what is available for them. So it provides an opportunity for you as financing providers to share your SME proposition so that people can, get to know you better, get to know what is available, remove the mystery of what is required for an SME, and, things like documentation, the qualifying criteria, so that these SME entrepreneurs can get ready. By the time they're coming to you, at least they have interacted with your information and are prepared with what is required. So, that's what this platform really supports. So once you have been set up, we will keep on holding your hand and, just making sure you're comfortable and are able to maintain the data comfortably. The process of registration for the service providers, for the banking service providers, is only on this end where you fill up the application. The rest of it will happen with us directly, whereby you will be contacted, and then once you're contacted and trained, you will now have an account that you will log into as a service provider to go in and maintain the data from a link that will be shared with you. So all the data, as Ian mentioned, is secured. There are various things that have been done to ensure their levels of security, and there are various levels of users that could access the data. So there are verification methods that you will interact with at the stage, at the right stage once you already submit an application. We are happy to say and to mention that we have so far started onboarding a couple of banks who are happy to have their data here because they see it as an avenue for MSMEs to contact them, because they also have expressed that MSMEs are no longer walking into the banks, of course, because of COVID. But now, this provides a virtual means for people to get to know more about the products and make inquiries about the products that they otherwise could have had to walk to the bank to seek audience with a with a salesperson or a relationship manager about. So we welcome you to contact us. I think we will share some information with you through KBA on who to contact in case of any inquiry, and then we can get started. Thank you very much. Over to you, Ian.
Thank you, Angela. That was great. I would just like to add a couple of other points for our financing provider and banking participants. That is to stress that the information presented here on the Financing Gateway platform is your information. So what people see is what is available in the public domain already. And we've been quite careful to make sure of that, so that we comply with data protection regulations, and so that we're not in any way affecting the way that you market or promote your financing or business development services. And perhaps, Angela, just one thing that might be worth reinforcing here before we go on the platform, as people can see it, and that is the registration as a public user. This is effectively, for those of you on this participating in this call who are enterprises or even government agencies, you can gain access to the filtering services and to the resources, which are the rich resources which are provided on the site, simply by entering some basic details here, as you see on the left-hand side of the screen, and doing what we call create an account. And that will give you a password access, which is very quick each time you log on. And it also provides you with the capability to create a sort of automatic filtering based on the information that you put in at the time of your registration. So, and of course, you can subscribe through that for notifications of news and events, but also notifications of new facilities and new services being posted on the platform. So that if there's a new promotion come up, say the government decides to develop some new financing scheme, which is going to be really interesting for your business, then you'll get notified of that once you're registered and logged in. Thank you. Okay. Go back to the homepage here. So, Sarah,
yes.
everybody, thank you very much for your patience. And I think it's time to open up for questions, and particularly any of those participants who have already managed to log in and take a scan through the platform. Thank you.
Thank you, Ian. Thank you, Angela. Yes, it's time for questions. I think Ian's and Angela's session was mainly to banks. Banks can utilize the platform. I know we have as well, other than our clients, MSME clients, we have SME member banks who've joined us today. So you're aware of what they've mentioned, what you need to do to take advantage of the financing instruments they've talked about, to just make it easier for the SMEs in your portfolios to access financing. So we'll take, I have seen some questions on the chat, on the comment section. These were questions that are, we'll take 3 of them, if I may just mention them. I don't know if Catherine is there. Catherine, are you still there? These were questions for Mr. Omukoko. If I may just read one of them by Daniel Kanyi. Daniel, you've asked, why does CBK have to force banks to adopt scores and credit information to access credit. Is it that the banks do not get it? Where is the gap? We have now had CRBs in the country for a considerable period of time, and automated decisions should already be the norm. So that's a question by Daniel. There's another question by Yasin. Yasin, you say, your question is there a few registered CRBs that are registered and active in Kenya? Do they share one database for establishing credit rating? Loan defaults that are reported to one credit bureau, do they reflect on the other credit bureau databases? If not, if I have a negative CRB score with Metropol, but the bank uses the same, for example, TransUnion to get a credit report on me, won't that reflect the wrong picture? That's a valid question, Yasin. So we can respond to those questions before we conclude. Catherine. Okay, sorry, I think Catherine and Mr. Omukoko are not here, but what we can do is we'll respond to your questions directly. For anyone who has been listed, because I've seen someone also saying if they were listed negatively and they want to clean up their CRB report, what do they do? So we'll give you contacts for Metropol. You can reach out to them directly so that you can have your report cleaned up. And these questions we will also answer you directly so that we can move forward, and we support you from where I sit as banks. And we move forward. So I think our time is up. Thank you, participants, for joining us today. We appreciate your time. I'm sure you're aware that we have monthly webinars through the Inuka program with KBA. So you can be logging in for knowledge gain, to just, they say knowledge is power. So for you to just empower yourself, it's a good thing. So our next webinar will be next month. Roslyn will share and we will invite you. So the topic of discussion will also be put up. Thank you, Ian. Thank you, Metropol, and thank you, KBA. We wish you a good weekend, and we look forward to growing together and supporting your business. Thank you very much.
Thank you, Sarah.
Thank you, Ian. Any comments?
Sarah, I think we should also, I think we should also thank KEPSA, which is hosting the Financing Gateway in Kenya. And they are available for everyone to contact. If you go to the KEPSA site, you will also find a link through to the Financing Gateway platform. And I should say also European Union project funding partners with the ITC markup project in Kenya and East Africa, for the East African Secretariat as well, who have kindly supported with their funding the development of the Financing Gateway. So thanks to them as well, and thanks to KBA.
Yes, indeed. Thanks.
Sarah, if I would just presence, I think there's a time you had called out earlier and I was on a phone call. I know you were just winding out. If you don't mind just maybe repeating the last question you had on CRB.
Catherine,
it was about negative listing, sorry.
Yes, we have some of our MSMEs have asked if they are negatively listed, what do they do? And there was also a question on if Metropol, if all the CRBs, I mean, you could be listed negatively on Metropol,
Yes.
and maybe listed positively, and these are the
CRBs.
I mean, TransUnion, maybe you're listed positively. So do they speak to each other? You know, because one report might give you a negative listing and the other report gives you a positive listing. So so one of the participants was asking, do these two reports marry each other such that there is a true picture of their listing that is out there that banks can look at and say this is true?
Thank you, Sarah, for that. Maybe just quickly to wind up, I know we are short of time. Even SME finds that they are negatively listed. The first point is to first determine, is that a true representation of credit as they know it? Because if there is a case where they would like to lodge a dispute, or they find that there is a record on their credit report that they are unfamiliar with, there is a process for dispute resolution where they can contact the bureau and say, hey, I find that I have been listed here for a credit that I never accessed. Kindly contact the supplier of the credit, and we will be able to authenticate whether indeed that credit was issued to that person by tracing back to the ID and so forth. On the other question where you mentioned that you may find that maybe Metropol CRB has a record that another bureau does not, I want to say that we receive information from credit providers that have been approved by the Central Bank of Kenya and are sharing information with us. So you will find outside of the subscribers who have been mandated by CBK to share information across all bureaus, we have third-party credit providers, some of whom may be pre-CRB regulations 2020, had been approved by CBK and had started sharing credit information with Metropol. But there is progress being made along these lines where credit information is now to be shared across all the bureaus. So I would say it is a work in progress. It is possible because you will find that like Metropol, we receive credit from SACCOs, we have trade credit suppliers, we have insurance companies on board, and these are third-party credit providers that we actually went out and marketed the concept of credit information sharing to, and in that regard, they came on board with us. So if an SME of a particular SACCO sharing credit information with Metropol CRB goes to another bureau where that record has not been shared, yes, you would find that that information is not in that particular bureau, but is with Metropol because of the variety and the diversity of the credit information providers that we have within our database. But again, like I mentioned, this is work in progress because then they will be there are plans to have credit information shared across all the bureaus. Thank you, Sarah.
Okay, Catherine. Catherine, just one last question. There's a question by Caroline. She's asked, does an increase, the increase in unsecured lending by banks, does it have an effect on their CRB report?
The increase in unsecured lending?
Yes, I think what they're asking is, I'm not quite sure, but I believe what they're saying is, when they take unsecured loans, does it reflect on what effect does it have on their CRB report, given that it's unsecured, there's no collateral?
Thank you, Sarah. You see, the credit report really consolidates the pattern of repayment by a customer. So be it unsecured, be it mobile, if you are repaying your loan according to the contractual obligations, then your credit score will remain good. If you are not repaying on time and the loan runs into default, that will of course negatively impact on your credit score. So really it is all about timeliness and not running into default.
Okay. Thank you, Catherine. Thank you for a great session. Thank you, Ian, once again. I think we will leave our contacts on the chat session so that if anyone has any other question or wants to reach out, they can contact either directly or Angela. Thank you and have a good weekend. So before